Welcome to Business Today, live from New York. I'm Michelle Fleury. Now, in the last hour, we have some fresh economic data to update you on. The US economy grew 3.3% in the second quarter in the government's second estimate of April to June growth. Now, the department had initially estimated second quarter growth at 3%. Plus, the number of Americans claiming unemployment benefits fell last week. But the big story at the opening bell is still Nvidia. The chip giant, the world's most valuable company, released results that were just shy of Wall Street's expectations. You can see the results. They were up, as you can see there. The revenue rose to $46.7 billion over the period. Now, that represents a 56% jump compared to the same time last year, and it was certainly above very high expectations. However, its forecast for the future was tepid, and that has some worried that perhaps the AI boom, of which Nvidia is seen as a bellwether, is perhaps reaching some kind of plateau. Well, to go through all of this, I'm joined by Daniel Newman. He is CEO of the Futurum Group, a technology research and advisory company whose clients include the likes of Amazon, Cisco, and Microsoft. Great to see you this morning, Daniel. Let's go through this. What did you make of Nvidia's results?
There were two narratives going into the results. There was a really high set of expectations where people thought, based on the successes of Microsoft and Google and their earnings, that this would be an absolute blowout quarter for Nvidia. But there was also these stories that had broken over the last few weeks about China and the possibility that China would be using more of its own technology, pushing back on some of these U.S. initiatives and the potential export tax on the Nvidia and AMD products. And then, of course, there was that MIT study that came out that was suggesting that 95% of AI projects weren't working. So you had the optimists saying this was going to be great. You had the sort of bears and pessimists looking for a break in the story. But I think what Nvidia really proved in the end was that this AI infrastructure boom is intact. It was a very tidy quarter with only a couple of areas that maybe deserve a little scrutiny at all, such as the fact that the data center number missed by the thinnest of margins. And of course, that was the number that everyone expected to potentially be a blowout. The only thing I'd say is the guidance I heard you suggest. Go ahead.
I was just going to say, I was reading one person's take where they said the period of hypergrowth at Nvidia is behind it, and now we're in a period of very high growth still. Do you agree with that assessment?
We are seeing the law of large numbers come into play, but when you see 56% overall growth against a number in the 30 plus billions rising into the 50 plus billions, that's an incredible year over year growth in an area where we expect to continue to see this. We forecasted out the next 5 years of AI data center chip spend, and we do see that growth sort of normalizing into the low 20% by the end of the decade. But we're talking about a $583 billion number. So it really depends on how we look at it. Just like the cloud providers, AWS and Microsoft, they all had triple-digit growth periods for many quarters in a row. We're seeing huge growth in terms of number of billions. But the percentage, of course, is going to come down as we start to see the scaling, the implementation, and the consumption take place at scale.
So the AI revolution, it sounds like, remains on track. And the question then is Nvidia staying at the heart of it? I mean, when you've got hyperscalers like Microsoft, Amazon, others, all looking to try to develop some of their own chips, and you've got competitors trying to catch up, does that start to kind of erode Nvidia's market share?
Our perspective is that Nvidia's market share will remain very strong all the way into the end of the decade. Having said that, we do see the custom chips that you're mentioning that companies like Google have already deployed at scale. Amazon is working on developing and implementing more and driving more consumption of their own homegrown chips. Microsoft has projects in the works, OpenAI, Oracle, Meta. So all of these companies are certainly going to be looking at building and investing in their own infrastructure, much like Apple did. And this is going to give them long-term gross margin, but this is more of a focus on their own use cases, which are very significant. Having said that, we see the enterprises, those that buy from these cloud providers, continuing to rely on Nvidia. We have a number of about 90% of the GPUs, the chips that Nvidia provides, staying with Nvidia all the way till the end of the decade. Having said that, we see these custom chips from companies like Broadcom making them for all those companies I mentioned. That's actually going to grow faster, we see, by about 2028, because the largest implementers, these big companies with the big operating leverage, are going to be still the ones spending the most.
And Daniel, we've got about 10 seconds left. We haven't talked about China. Where do we go from here? Because they don't expect H20 sales in this quarter to do much for the next set of results.
Yeah, it felt like a really conservative guide on that. There's about a $2 to $5 billion upside if these licenses push through. I think there is the opportunity, but I think Nvidia is being incredibly conservative, and I think that's the right move given all of the geopolitical conflict that is going on with China and the US.
Daniel Newman, CEO of the Futurum Group, a technology research and advisory company, joining us today to go through Nvidia's blockbuster results.